Hey guys, Mike here. So yeah, I'm gonna get into what I was wrong about, and obviously busy day, booming day in the market. Got the Fed out speaking, raising interest rates. By the way, 75 basis points. Were you surprised? No, of course not. Right? We got a Fed that does not like to rock the boat, and this is one of those, I guess you could say, rallies or whatever it was. Looked all good, but it's always suspicious to me when I see everything going up. Right? I mean, oil's up, ARC stocks are up, transport stocks are up. You end up with, there's all the Kathy Wood stocks right there. The banks are up. Genomics are up. You got the travel stocks. We'll get into Hilton and all them later. Just absolutely roaring right now. You still got, for some reason, cruise stocks just can't seem to catch a break. They go up a little bit, but they're still way down, right? You got all your metals and everything up, and look at Mara right there, 22%, HUT 18%. You got your cybersecurity. There's Walmart and Target on them staging comebacks. You got your Pinterest. Look at Pinterest, 11%. Trade Desk, 9%. Snap still can't get no love. You got, even though China did lockdowns, by the way, over 1 million people announced today, no problem, still rolling, going up. There's your fintechs going up. Look at PayPal, 12%, and that's because a big hedge fund, I believe it was, initiated coverage and bought a bunch of PayPal, so that was why they were up more than anybody else. You got your semiconductors all roaring. NVIDIA up 7.6%. We'll get into Qualcomm later. They reported earnings. Shocker, not good. Shop drops 15% yesterday. Dumpster fire earnings this morning, laying off 10% of the workforce, goes up 12%. That'll let you know where we're at. All your big boys, look at that. When you see them up that much, you can guarantee the indexes are just absolutely killing it, right? VIX ends up getting crushed today. But look at these indexes. I mean, SPY 2.6%. Look at the Qs, over 4% up. That is crazy. Small caps up 2.28%. Right there you see value turn into risk. Right there, 1.59%. So, and don't forget, I mean, look at all of the sectors. All green. Technology 4.3%, but you're going down. Doesn't matter what it is, whether it's oil, anything else. And there's your short sellers going, don't worry, this is fine. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And so that leads us into Jerome Powell, and I would give you a whole video on it, but honestly, it'd be a total waste of time. Just rewind and watch the other videos. That's pretty much, there was nothing really said there. You could say he was dovish if you want to say that, because he certainly wasn't hawkish, that's for sure. And so there was nothing said. Again, he doesn't like to rock the boat or do anything like that. And he said they have reached neutral, which is pretty much where they're at right now. He said the last CPI report was way worse than they thought it was going to be, But again, they don't like to rock the boat. Again, these are politicians. We are sitting here, and don't forget, we're all voting in November here, coming up soon, so we're in an election year, and that's just the kind of guy he is. And so by him doing what he's done, or the Fed that is, they pretty much almost kind of solidified what or where we're at. And the big thing I want to talk about is he was asked a question, do you think we're in a recession?
I do not think the U.S. is currently in a recession. And the reason is there are just too many areas of the economy that are performing too well. And of course, I would point to the labor market in particular. As I mentioned, it's true that growth is slowing, and for reasons that we understand. Really, the growth was extraordinarily high last year, 5.5%. We would have expected growth to slow. There's also more slowing going on now. But if you look at the labor market, you've got growth. I think payroll jobs averaging 450,000 per month. That's a remarkably strong level for this state of affairs. The unemployment rate at near a 50-year low at 3.6%. All of the wage measures that we track are running very strong. So this is a very strong labor market, and it's just not consistent with 2.7 million people hired in the first half of the year. It doesn't make sense that the economy would be in recession with this kind of thing happening. So I don't think the U.S. economy is in recession right now.
And he is 100% right? Now, he was asked, did he see the GDP numbers coming out tomorrow? And he said no. And I rewound it a couple times. I'm not a body language expert. And I was like going, do we really believe that? Like, the head of the Fed has not seen the GDP report is going to be hitting tomorrow. I don't know. I mean, maybe he didn't. Maybe he didn't. But I'm like, I find that hard to believe, and almost kind of disturbing that the head of your Fed and Treasury and all that hadn't seen these numbers come out tomorrow. Come on, really? And so, and he's right. That's what I'm saying. And this is where we're going to get into where I was completely wrong. And what's he talking about? Yes, unemployment super low. Tons of jobs out there still. Wages still high, which we're going to get into. I'm going to show you what I'm talking about on that. And all kinds of different stuff. And you say, yeah, so if GDP comes in negative more, on a technical level, yes, we would be obviously in recession, but do you really think we're in recession, right? And of course, I still will fight back and say I think there's just two different things going on. I think one group of folks feels like they're in a recession, and the other groups are partying like it's 1999, okay, because they got so much cash they've hoarded. But the thing to think about is, what sector of the economy is always hit first when it comes to a recession?
Are we in a recession in housing?
Yes. The housing market always feels a recession first, just because it's the ultimate high ticket purchase. So I think we're going to see housing get worse first and get better first. But things have got to get worse before they can get better.
What are you seeing right now as far as sales and trends, and how much has it changed?
Well, it's been a sea change, especially in the markets that really boomed during the pandemic. So if you look at Boise, Salt Lake City, Denver, these were the hottest markets. Now those are the markets where more than half the listings have had a price reduction. In Salt Lake City, it's 65% of the listings having a price reduction. So homes are being marked down near the end of the summer because people are trying to get anyone to buy it before the school year starts. And it's going to be a real log jam starting to clear this inventory.
And that interview was yesterday, and this is what he's talking about right here, guys. This is the level we're at right now when it comes to U.S. new single-family houses sold. As you can see, it's kind of an important area, right? But when you look at the gray areas, the shaded areas of the recessions, and you can see, obviously, we're heading down pretty fast on new home sales because of prices, interest rates, and usually that's what's happening. We're heading straight down before we hit the actual recession itself, or official recession. And so it's the lowest it's been since April 2020, but you can go back and see we've been in these positions before. And there's really two big things to take away from this, and it has to do with the housing sector affects more, other sectors out there than I've ever seen in my life, right? I mean, I think it does. I think nobody would argue that. So what we have to see is, and I hadn't seen this yet, I've looked this up, you have to see the jobs related to the real estate industry. Do we start to see mass layoffs, right? Not some layoffs, because we know the real estate brokers are already laid people off. Even the gentleman just did that interview right there, laid off massive amounts of employees. But I'm talking about the construction workers, the people that supply things to them, that kind of stuff. Are they starting to do mass layoffs? Because those are good paying jobs. That's really what you got to watch out for on that. I have not seen a huge uptick in that. I've looked for it. And so I think we're actually okay with that right now. It can turn very fast. The other one is, and this is where I worked in this industry for 4 years as a manager, and I just couldn't take it anymore, because if you want to see blood-sucking vultures, and no offense to anybody who works in this industry, in your denial, if you disagree with this, is that you want to see somebody suck the blood out of somebody fast and see fangs come out. It is in the real estate market where it comes to renting, right? I worked through it in the '08 crash, and I couldn't believe the stuff my company was doing. I worked for Equity Residential at the time, one of the largest. I assume they're still out there. And man, we raised rents like between 30 to 50% as soon as people started getting foreclosed on, right? And why did we do that? Even the current tenants we had, have been around for years, we did it on. And why? Because they didn't have anywhere else to go, because everybody around us was doing it, and we knew people couldn't go buy homes, and nobody was going to buy a home anyway, because the whole housing market was just crashing down around them, and they couldn't get a loan if they tried. Well, what are we in now? We don't have a bunch of foreclosures. We've got normal rates as far as I've seen. But what do you have? Houses are so expensive and the interest rates are so high, a lot of people can't qualify or just don't want to buy at these high prices, even though they're starting to come down some, and so what are they got to do? They got to rent. And so what are apartment complexes? What are companies that own houses? What are we doing? Raising rents. And so if you have a rental property and you hadn't raised your rent a lot, you're behind the curve, because they raise rents like crazy, and they're going to keep, that's what I'm saying. And when it comes to inflation and core, when it comes to housing, for example, and the rents, like, how are you going to get that down, right? I mean, why would they lower the rents? They know people can't go into these houses anymore. They can't afford them, can't get qualified. So you're going to ride that gravy train as long as you can. And so, and I've showed you the charts. If it was a stock, you would have been involved in making a ton of money, right? And because that trend is still going up, right now as we speak. And so, that's the thing to take away from what's going on in the housing market right there. And so we'll see how that plays out. But I do want to go on in the part where, I was totally wrong at, and I want to sit here and make sure I give credit where credit is due on this one. And I got to thank Robert here because he put this comment down here saying, hey, I heard you were looking for, the savings rates broken down by income brackets. And this gentleman who runs a YouTube channel named George Gammon, I think I got that right, did a video. And so I was able to get a chart from his video and stuff. And it was a good chart, so go look him up and look at it. And here's the chart right here. Right, and this shows the bottom 25%, and it's broken down to 4 different kind of brackets, right? And it shows when they started sending, stimulus checks out in 2020 versus where we're at now in 2022. And these arrows represent stimulus checks, right? You see the stimulus checks came at the bottom, boom, it spiked everybody's income up, and you can see the bottom 25% spin it like it was water. They get the stimulus check, you get a pop, boom, they spin it fast. You get it, they spin it fast, and you can see obviously the trajectory going from 2021 when the last stimulus check went out till now is going down. But look at where supposedly these savings rates are, these bank accounts. Around, what is that, 65, 70% somewhere in there versus where they were at. You can see the top 25%, they're just steady across the board because they didn't have to spend it. And this is where these headlines like this come in at. Hilton Worldwide raises full-year guidance, which we'll get into in just a minute. And then Chipotle, yesterday, of course, when they reported, they go up a massive amount because what they're saying is, the company has seen a pullback from lower income consumers, but fortunately for Chipotle, the majority of their consumers are actually the higher household income, are in the higher household income bracket. And it wasn't just Hilton, it was also another hotel company that came out today and reported, and they killed it, right? They all went up. And I believe Hilton, they even raised their guidance and said, we're good. People are traveling and spending, doing their thing. Chipotle was the same thing, saying they're doing their thing. And so that's where, when you don't know how much, I just would have thought in a million years that the lower bracket of income earners would still have that much money left over. But I guess when I think about it, it's like, think about it. We hadn't had to pay student loans for 2 years now? And they're thinking about delaying that again, by the way. And remember, it's an election year. And, you hadn't had to pay rents, mortgages, you couldn't get foreclosed on at all doing that. I think some people even got out of paying car payments, for God's sakes. You got all that plus the stimulus, plus you still got 20 states sending some kind of form of stimulus out right now, right? And I guess you add all that up, I guess they should have a lot more money left over, right? And so that's the thing, and that's why I think really what you're seeing, that green light in the market, is they're saying, look, it might be a temporary move back up until we see fourth quarter or first quarter next year or whatever. And like the Fed said, you're not going to feel what we're doing right now until later on, right, with these interest rates and stuff. But because you got more of a dovish Fed in a way where they know they're going to have to pivot, they're going to have to, they know it, they're going to raise a certain amount, but they're probably going to start, maybe shrinking how much they do in the interest rate hikes, like probably 0.25, 0.5. And supposedly, as far as I know, there's nothing going next month unless something crazy happens. And so you got that on top of the anywhere from the 0 to 50% bracket income earners. They still got money, and they're dipping into their savings to make it through this, but they still got money. And so that's money to spend. Credit cards, have like an all-time record of people applying for credit cards to put it on. And one thing we're good in America at is spending money and running up debt. And so that's what the economy is based on. So therefore, that's why you're seeing these earnings. They're already beat down, in the ground. I'm going to go over, I have a video out just showing you the format I did yesterday real quick with the earnings on Facebook, Qualcomm, all those big boys. And, you get to see how low the bar actually is set. But that's why they're set like that, right? And then what's happening, you also see, because what stocks are going up the most? The beaten down Art K stocks. That's what's going. And by the way, if you own Teladocs as a preview, I really feel bad for you if you hadn't looked and seen how far down that stock is right now. Shocker! The earnings weren't good. I cannot believe it. And I think isn't that the top holdings of Art K? I forgot because she keeps switching them back and forth. But that's not good. But and so I'm babbling. But that's where we're at. And so I didn't know that. And so thank you to the viewer for that. And seeing that, and it kind of lets me respect and look back and go, you know what? Yeah, technically we might be in a recession tomorrow, but because people are still spending and companies are telling you, the restaurants, the travel, all that stuff, yes, they're spending, they're booking out like crazy traveling. And yeah, we may not be buying t-shirts at Walmart, right? But we're going to Hawaii. We're going to Europe, right? We're doing all these things. And like I told the members this morning, China locked down like 1 million people in one of those big cities that they have over there, and they're watching, I think it's Shanghai or some other one as well. I mean, literally I saw videos of them welding the doors shut on the apartment complexes. And guess what? Didn't affect Chinese stocks, didn't affect the stock market. That would have sent the market, a month ago, that would have sent the market reeling, right? And why? Because our big tech companies get a lot of revenue. Tesla gets a lot of revenue from China. Didn't matter. Did not matter, right? I mean, the bulls are running. That's basically what's happening. And the short sellers are getting crushed if they're even still hanging on. I don't know why they would be. But we'll see. You know, today was a big day in the market. Usually you see a sell-off going in tomorrow. But what do we? And, of course, don't forget we got GDP tomorrow. Could shake the markets. I don't know. At this point in time, I just don't know, right? And then you got Apple and Amazon afterwards. But the bar is so low. All they got to do is trip over it. That's all they got to do. Just trip over it and fall down, and you'll be fine. That's really where we're at, right? I mean, you've seen that during this earnings. And so that's just where we're at. I mean, once I saw Shopify go up double digits today, I was like, oh, Lord. You know, I definitely see where we're heading. Now, how are you going to go down 15% yesterday, 12% today you go up? Really? And I don't know if you heard that earnings call, was not good. And so, but it didn't matter. It's just been hammered so much. Wasn't that a $600 stock? I think, wasn't it? I mean, it was up there at one point in time, like way up there last year. So anyway, I hope you guys have a good one. Hit the like, subscribe button if you got something out of this. And I'll have a earnings short video out for you later on, okay?